Hello everyone, and welcome to this presentation on how to identify quick momentum moves before they happen. Hello and welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. I want to thank you all for taking time out of your afternoon to come to this presentation. You'll find that this is going to be a very educational webinar. Why? Because Specialist Trading is an educational company first and foremost. I have been trading for roughly 37 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I traded through the crash of 1987. I traded through the great bull market that started right after that. And I've seen and heard and traded just about every strategy and system around. I've traded through sideways markets, through straight up markets, through straight down markets. And in the mid-90s, I left the floor to manage money and to trade on my own, trade my own account. And roughly about 5 or 6 years ago, I started Specialist Trading, where all I do is basically teach and mentor everything that I've accumulated in my 37 years of trading to all of my students and my members. So everything that I teach and trade and things I'm going to be speaking about today, I actually use myself in all of my personal trading as well. So this promises to be a very educational webinar. I'm going to give you some great things that you can start using as early as tomorrow if you'd like. But before we begin, I asked that you please take a moment to view our disclaimer. We are required to show you this. I'm going to show and present a lot of performance results, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention we have a fairly large crowd here, some new people to my presentations. As I stated, we are an educational company, and I like to give my presentations as if we're in a classroom. And because of that, I like to wait till the very end of the class to take any questions. So I know a lot of you have gone to presentations before where you just ask a question and it's immediately answered. I like to wait till the end because many times it breaks up the momentum of the particular class. So I'd rather wait if you write down or try to remember any questions that you may have, and we'll reserve the last 10 or 15 minutes of this presentation for any questions and answers. I'll also leave you with an email address as well as a phone number. If you'd rather contact us that way with questions, you can always email us or phone us with any questions you may have. So please remember, if you happen to have a question, write it down or kindly wait till the end of the class to ask any questions, okay? I have to look through a question and answer box actually to have any questions answered, so there's no way I'm going to be opening that up until the very end of the presentation. I'll just answer one question because I know most of you people always ask this. If you have to leave early, yes, all of our presentations are recorded, so the way to receive a link to that is by the email address I'll be giving you later on in the presentation, as well as a phone number, okay? All right, so why don't we begin? But first, I also want to make mention of the fact that we just started within the last couple of months being on Twitter, where I give a lot of great information. I give a lot of signals that have just been generated for people that are non-members, and so you can reach us and contact or follow us at Twitter at SPCLSTTRADG. That's our handle right there. As I stated, we give a lot of great free information. Once again, it's not the up-to-date information that we give all our students and members, but we will tell you after the fact, and you'll know whether we're long or short a particular signal or not, okay? At SPCLSTTRADG. Okay, as I stated, we are an educational company, and I know a lot of you may say, well, Steve, you're a specialist and you were on the floor and been trading for so long. You had probably a license to steal, so it's probably very easy for you to be successful or at least have some type of consistency in the markets. Well, that's not true. My first year or two trading on the floor, I nearly thought that was going to be it for me as a trader because I couldn't make a dime. In fact, as I often state, I would have 3 or 4 great trades followed by one trade where I'd give everything back. And my mentors taught me new and simple ways in which to get on track with trading. They were specialists themselves, and they basically said, Steve, the reason why you're losing is because you're overcomplicating your trading. You're putting far too many indicators and watching far too much news and listening to too many people trying to come up with an idea, when the real way to success is if you strip those things away and you just learn to follow the market and just what you see in front of you on the chart. You'll have a lot more consistency in your trading. So I started to do that, and they were right. I didn't really get on that road to consistency until I started simplifying my trading. So if you follow any traders that have been trading 30, 40, 50 years down the road, you'll see that most of their trading plans are extremely simple, maybe 3, 4, 5 rules at most. Whereas you see the people that have been trading maybe 3, 5, 10 years, they have the most complicated trading plans. It's very difficult to discern what they're doing. So the traders that have stood the test of time, that have been around for a long time, have things that are tremendously simple in their back pocket. And that's the way I trade, and that's the way I teach all of my students and members. So things you're going to be seeing today are extremely simple. Probably you maybe even heard of them before, but they work. They stood the test of time. I know firsthand because I use them, and these are the things that have turned my trading around. So this is what I share with all of my students and with all of you in my presentations, because my goal is to teach you how to trade with the specialist edge, which is rooted in simplicity. All right, so here's what you're going to learn today. We're going to teach you 2 identifying techniques for identifying momentum. Remember, we're trying to catch quick momentum moves before they happen. And there are 2 extremely simple but powerful ways to find out if a market is trying to give you a clue that there's going to be a big momentum move in the next 1 to 5 bars. So I'm going to show you these 2 techniques, and then we're going to see how these 2 techniques make up the foundation of probably one of our most consistent strategies, strategy number 4. And I'm going to show you some strategy number 4 examples, some recent examples in the markets. Then we're going to take it up a notch. We're going to add a short-term trend identifier. This is a proprietary tool we have for our members at Specialist Trading. And we're going to add that to our momentum techniques and our strategy number 4, and we're really going to have a powerful combination for catching these short-term momentum moves. Okay, so we're going to share with you the 2 identifying techniques, and then we'll show examples of the short-term trend identifier, strategy number 4, and how they work together as a tremendously powerful combination in capturing these short-term moves. Okay, so let's start with technique number 1. And once again, if you happen to join us later, if you have any questions, we'll take the questions at the very end. I won't even answer any questions while the presentation is taking place. So kindly wait till the end to ask any questions. And also this is being recorded. All right, so let's talk about technique number 1 for catching momentum moves. What we want to first do is properly identify the trend. Once again, extremely simple. I'm sure all of you have heard this before. The trend is your friend. You must trade and stick with the trend. But the reason why most people have difficulty with this is because there's 1,000,001 ways in which to discern what the trend is. I'm sure if you went to another presentation for another webinar, someone would tell you an entirely different way for finding the trend. You could have 10 or 20 different ways for finding out what the trend is. But we feel we have the simplest yet the most powerful way for discerning what the overall trend is. In fact, let's look at this example. Someone just looking at this at face value would say, well, Steve, there is no trend in this generic chart here. You see, because we're going down, then we go back up, and then we go back down again. So we're really in a range mode. There's no trend here to look for any type of signals. Well, that's not true, because at Specialist Trading, the way we find trend is by adding the 50-period simple moving average. Okay? And then we ask ourselves, where is price in relation to that 50-period simple moving average? Because if price is above, then you're in an overall uptrend. The overall trend is up. Okay? So that's how simple it is. All right? Someone would look at this and say there's no trend. At Specialist Trading, all of our members would say, no, we're in an overall uptrend. Okay? How about this chart? Someone would look at this at face value, and this generic chart would say, well, no, we're in a rangy or maybe just kind of sideways moving market. We're going down and then back up. But at Specialist Trading, the first thing we do with any chart, whether it's a 5-minute chart or a monthly chart, it does not matter whether it's the Emini or the euro dollar. It doesn't matter what we're looking at. We add a 50-period simple moving average, and we ask ourselves, where is price in relation to the 50-period simple moving average? If the majority of price is below, well, then the overall trend is down. You see how simple that is? But it's extremely, extremely powerful. And I'll show you some examples in just a few moments. All right, so now we have the overall trend. That's technique number 1 for capturing those momentum moves. Then what are we looking for? We're looking for a clue that the market is giving us. Remember, I used to spend so much time and energy listening to outside sources. When I was trading, we didn't have trading rooms or chat rooms, but we had something very similar. There were subscriptions to trading groups who would tell you what they should do, and a lot of people would write in, and you would get these weekly letters, and they gave you tons of ideas on what to do. So you would, bet your bottom dollar on what they said was right. And then you'd have tons of indicators. And then you'd look at the news and wait for news announcements to come out. So we're looking at all these outside sources to tell us what to do, to give us a clue. And my mentors taught me that, Steve, The only clues you should be listening to are the ones that are right in front of you, coming from the chart that's right in front of you. That's the only thing you should be concerned with. All these other things you're concentrating on are just overcomplicating your trading, and you're not getting any more successful. So how good are they? Okay? And ask yourself about all these things you're listening to, all these trading rooms, all these chat rooms, all this news, all these indicators, are they helping you that much with your trading? I don't think so. So technique number 2 is right up this alley in keeping things as simple as possible. We're looking for a clue that comes from the market, that comes from the chart in front of us. And that clue is we're going to look for a bar that closes either in the top or bottom 25% of its range. Okay? Because if a bar closes in the top 25% of its range, the market is giving you a tremendous clue as to which direction it wants to go, and that's up. If it closes in the bottom 25% of its range and it's below the 50-period simple moving average, it's giving you a tremendous clue that it wants to go lower. That's how simple it is. So let's look at these charts again. We've already discerned that we're in an overall uptrend, and we're looking for bars that close in the top 25%, which are right here in green. So we see here off this first example that we had a little nice short-term uptrend move, okay? And then off the second example, we close in the top 25%, we have an even better move. So at these 2 points, the markets were giving us tremendous clues that they wanted to go higher, all right? How about in this example here? We're below the 50, so the overall trend is down, so now we're looking for bars that close in the bottom 25%, such as this example, okay? And at this point, the market is giving you a clue that it wants to go lower, as it did. You see how simple that was? We didn't have to listen to any news events. We didn't have to figure out if it was bullish or negative or positive or aggressive to the upside. We didn't have to belong to any chat rooms or trading rooms or subscribe to any type of gurus letters. We just listened to the market. So now we put these 2 things together, and with the help of a couple of other rules, some proprietary rules, we put together probably one of our most consistent strategies, which is strategy number 4, which incorporate these 2 momentum keys here. Let's talk a little bit about strategy number 4, the highlights. Who should trade strategy number 4? Well, all traders, okay? We have traders that are hedge fund traders. We also have traders that have been trading for just a couple of weeks, all right? Strategy number 4 is traded in over 60 countries around the world, from beginners to advanced, the exact same rules. So it doesn't matter if you have a multi-million-dollar account or if you have a $10,000 account. You're going to trade it the exact same way. It's for traders who are looking to catch quick momentum moves. Now, the intensity level, if one is the most intense, picture a strategy where you have to always be locked in and watching it every moment to make sure you don't miss an opportunity, and then picture the same strategy where it's so relaxed you can just enter your orders and walk away and come back the next day to see if your orders were filled or where you should place your stop. Well, from 1 to 3, this is a 2. Okay, so 1 being the most intense, 3 being the least intense. This is right in the middle. It's a moderate intensity level. We only use 1 indicator. That's how simple it is, where it's basically a pattern recognition strategy. This works on any time frame, in any direction, and in any market. I'm going to show you examples in all these different time frames and markets. Lastly, I'm not going to sit here and promise you that every trade works great. I'm going to show you a lot of great examples, but I'll also show you some examples where it didn't work. Okay? Our edge here is not about hitting home runs. All right? From time to time, we will hit home runs with all of our methods and techniques that I share with all of my students. But that's not what our goal is. Really, what we're looking for is consistency. We want to trade 2 steps forward, 1 step back. We know we're going to have losses. It's inevitable. That's going to happen with any type of trading methodology. It's going to happen with any market and any time frame. But we want to keep our losses to a minimum. We want to make sure that we have 2 wins as opposed to 1 loss, as opposed to vice versa, I should say. 2 to 1. So in other words, for every couple of wins we have, we'll have 1 loser. Then we'll have 2 more wins and another loser. Better than having 1 win and 2 losers, which is the way I used to trade on the floor. Okay, so we're looking for that consistency so that over time you'll have a nice steady upward trend in your equity chart. Okay? Let's show you some strategy number 4 examples which incorporate the 2 identifying techniques that I shared with you. Okay, and you'll see exactly how they fit in these chart examples. All right, SWM. This was on the 13th, which was just a week ago. As we see here, the first thing, we're above the 50-period simple moving average. So what does that mean? It means the overall trend is up. So what else does that mean? It means we're only looking for buy signals. We will not short in an overall uptrend. All right, so we can only look for buy signals. That's all. So this means we're looking for bars that close in the top 25%. Well, this bar closed in the top 25%. When we talk about the top 25%, we talk about the exact high of the bar to the exact low of the bar, and then we just simply divide by 4, okay? And if we close in the top quarter of that division, that's the top 25%. All right, so we're taking the exact high down to the exact low. We're measuring what that range is, divide by 4, and we want to close in the top quarter of that range, okay? If we're going short, we just do the opposite. Well, as we see here, we had another bar that closed in the top 25%, but this did not meet all the qualifications for strategy number 4. So this is not a signal. But on the 13th, all of the rules were met. So this actually is a valid setup to go long SWM. So this was on the 13th, and so let's look what happened. Well, in the next 3 days, we would have made roughly a point or two being long this particular trade. This is how simple this is. How about TGT? This was the first week of January. As we see, we're below the 50-period simple moving average. And we have 2 bars here that closed in their bottom 25% of their range, and they met all of the qualifications of strategy number 4. Therefore, we have 2 setups to go short. All right? This was the first week of the year. And look what happened. Okay? It does not get any simpler than this. This was all done without the need of looking at any news, without the need of being in any trading room. Only thing we did was concentrate on a few set rules. We looked at the 50-period simple moving average to tell us what the overall direction was, and we looked for bars closing in the bottom 25%, along with these 2 other proprietary rules. How about the Emini? Well, this is a 5-minute chart of the Emini. This was on the 14th. This was a week last Friday. First thing we see is, where is price in relation to the 50-period simple moving average? Price is above. So the overall trend is up. That means we can only go with the trend. That means we can only look for buy signals. So we look for bars that close in the top 25% of their range, and then we look for bars that meet all the qualifications and requirements of strategy number 4. And that's this bar right here, roughly about 9:40, 9:45 last Friday Pacific time. And in the next hour, could have made a nice 5 or 6 points to the upside on a 5-minute chart. Now this was yesterday. As we see here, the majority of price was below the 50-period simple moving average, so the overall trend is down. And we wanted to short the market, looking for bars that closed in the bottom 25% of the range that meet all the rules of strategy number 4. And if you were a member of specialist trading, you could have taken all of these signals going short yesterday on a 1,000 tick bar chart because they were all valid strategy number 4 signals. And this even works on daily bar charts. This is a Globex chart of the E-mini, the overnight chart. And we see here on the 24th, we had all the conditions met to go short. Why? Because we closed below the 50-period simple moving average, and we were in a bottom 25% along with a few other proprietary rules. So you could have made a quick 40 or 50 points in the E-mini on a daily bar in the next couple of weeks. And just using the exact same rules, we look at the Forex markets here. Here's the euro dollar. These are all buy signals to go long. The euro dollar, all of our members in the Forex courses were all privy to all of these signals. And then the Australian dollar, price was below the 50-period simple moving average, so these were automatically generated as sell signals. So you see how simple that is. Without the help of any news, everything we had here was done simply by following the rules, and the 2 main rules are, where is price in relation to the 50-period simple moving average? If price is above, you're in an overall uptrend, and you're only going to be looking to go long. If price is below, you're in an overall downtrend, such as this Australian dollar, and you're only looking to go short. Then we need to find a setup, and the majority of the setups need to have you close in the bottom 25%. Okay, and as you see here, all of these bars closed in the bottom 25%. Now, there are just a couple of other rules with strategy number 4, but we can't divulge those because those are basically for the members of specialist trading who already purchased the course. We don't take things such as volume into account. We don't care about that. We don't look at news events. There were news events in all these scenarios and examples that I just shared with you. Probably some of these signals fell on news event days. Didn't matter. Didn't matter what the news was. We never look at news. News the reason why we don't look at news is because there's too much subjectivity in it. 2 people can look at the same news event and come up with totally different scenarios on what the market or what that particular issue is going to do. At specialist trading, we want things that are more cut and dry. We want to look at the same thing and have everyone, hundreds of people, come up with the same conclusion. Just the way you see that price is either above or below the 50-period simple moving average. That's it. Everyone knows if it's above, you're in an overall uptrend. If it's below, you're in a downtrend. There's no way to use any subjectivity there. All right? So that's why we don't look at news. There's just too many ways to interpret it, and we don't want to leave room for interpretation. That's where you start complicating your trading. But once again, I stated at the very beginning of this presentation that nothing ever works all the time. Okay, here's a perfect example in SNDK. This was just at the end of last month. We see here that we're above the 50-period simple moving average. We have a bar here that closes in the top 25% and meets all of the other rules. So this is a perfect scenario to go long, right? It was an actual signal, as you can see here by the arrow. It automatically generated a buy signal with this arrow right here to go long SNDK, I believe on the 26 or so. And look what happened. Had you gone long, you would have lost money. You would have been stopped out. But about a week later, guess what? The program automatically generated another signal, and this one worked. So how will we know which ones to take and which ones not to take? Because as I stated, sometimes the signals work, sometimes they don't. So how can we even, increase our odds for success? How can we increase our odds for success trading with strategy number 4 by adding the Pet Dee? All right, what is the Pet Dee? Well, it's the Primo Early Trend Detector. It's a short-term trend identifier where the 50-period simple moving average is an overall trend identifier. The Pet Dee is the Primo Early Trend Detector, and it's a short-term trend identifier. And the way we express it is through a proprietary Colorbar algorithm. Let me show you what I mean here. On a chart, if you see a series of green bars, such as you see here, or the majority are green bars, well then the short-term uptrend is in place. Conversely, if you see a series of red bars, well then you have a short-term downtrend. All right, so how can we use this to elevate our odds for success with strategy number 4 using the 2 momentum identifiers I shared with you today? Well, if we're looking to buy, we only trade strategy number 4 buy signals that are colored green when the bars are green. Okay, so let's look at the SNDK once again. Here were the 2 signals that were generated, 2 buys. This one didn't work out, and this one did. Well, how could we, at least kind of have a better identifying procedure? We add the Pet Dee, and now we see that this signal was generated when the Pet Dee was red. So you would not have taken the strategy number 4. Even though we closed above the 50-period simple moving average and we closed in the top 25%, the short-term trend identifier was saying the short-term trend is still going lower. So you would not have taken that. But when this strategy number 4 signal was generated automatically, guess what? The bar was green. So this one was okay to take, and you would have had a nice profit. So the Pet Dee, when added to strategy number 4, would have kept you out of this trade and kept you in this trade. Conversely, let's say you want to go short. All right? Well, then only trade strategy number 4 sell signals that are colored red. All right, let's look at this chart here in ROST. Now, the overall trend is down. Why? Because price is below the 50-period simple moving average. Now, these are all automatically generated strategy number 4 sell signals. But guess what? These didn't work out very well. All right? You have one here, we went sideways and we went higher. And you had another one, we went higher. Another one went sideways, lower, then higher. And then we had another one. So how could the Pet Dee have helped us? When we add the Pet Dee, we see here that these first 3 signals were colored green. In order for us to go short, they must be colored red. So we wouldn't have taken these. But guess what? This last signal was colored red. So we would have taken this, and look what happened. Okay? See how simple that is, how we increased our odds for success. Trust me, strategy number 4 already has very high odds for success in and of itself. But when we add the Pet Dee, we've increased the odds and our chances for success even more. So let's look at some strategy number 4 and Pet Dee examples when these 2 things are added together to make a really powerful combination. Remember, the crux of strategy number 4 is using the 50-period simple moving average to tell us the overall trend and then looking for bars that close in the top 25%. Then we just have a few other pattern recognition requirements to be met. All right, let's look at FRX here. First thing we ask ourselves is, where is price in relation to the 50? Well, price is above, so this means we're only going to be looking for long signals. Well, strategy number 4 generated a buy right here, but the bar is red, so we would not have taken this signal, and really nothing happened in the next week. So we're out of the market in FRX, but then another signal is generated about a week later, and this time the bar is green. So we would take this signal, which is, I believe, the 3rd of February, and then look what happened. Okay? You see how we close in the top 25%, we're above the 50-period simple moving average, and we identified a short-term momentum move. How about XL and X? Where's price in relation to the 50-period? Well, price is above, and we have 2 automatically generated buy signals, and they're both green. All right, so nothing really happened the first week, but we still are in the trade, and we see another signal was added, so it gives us a little more confidence to stay in the trade. And then guess what? It finally kicked in. Momentum kicked in. If we look at JP Morgan, we see here for the first part of this chart, price was above the 50-period simple moving average. We had an initial signal here, but the bar was red, so we would not have taken it, and nothing really happened. Then we had a next signal where the bar was green, followed by another one, and we had a nice move to the upside. When the rally ended, we now go below the 50-period, so we're looking only for shorts, and we have a short signal that was generated right at the beginning of February. How about Amgen? In this particular example, you'll see this from time to time in a very rangy market where price goes sideways. It oscillates above and below the 50-period simple moving average. We had a signal to go short, even though the majority of prices weren't below the 50-period, at least the close was below. So this was a very weak signal to go short, plus it was green, so we would have totally negated this signal and not taken it at all, and as you can see, nothing much happened. But then we were issued another signal to go long. I believe this was on the 8th of January, and taking that, you would have seen the stock went from roughly 117 all the way to 128 or so, I believe. Now here's Costco. We're above the 50-period simple moving average. We had 2 great buy signals, but guess what? They're both red, so we would not have taken them. And this would have saved us a lot of money. The Pet Dee finally said, you should not be taking this because the signal bars are colored red. So look how they would have kept us out of this declining short-term downtrend, and we would have gone much lower. But now price is below the 50-period simple moving average. And as we go lower, we see, well, we have an automatically generated signal to go short. We're below the 50, closing in the bottom 25%, and we're colored red. So this is valid, and look what happened in the next 4 days, from 118 down to roughly 114 in about 5 days. Tiffany had a really nice signal. We're above the 50-period simple moving average. We have a valid signal to go long. It's colored green, and we went roughly from 80 all the way up to 84. Okay, so a nice 4 points in about a week. And then we had a little pullback, and then another signal was generated, and the bar was green again. So you could have taken this roughly at 82, and you can see a really nice rally all the way higher, roughly about 8 points higher. ZTS, we had a buy signal generated here. We oscillated just below, but then back up above the 50-period. Most people would have taken this, but we wouldn't because the Pet Dee says it's a red bar. Now, it went up for 1 day, the momentum, but then it went back down. So we wouldn't really have missed anything. But then a week later, we have a automatically generated sell signal to go short ZTS because it is a red bar. So it's a valid signal to go short, and you would have gone from roughly 31 and a quarter down to 30 and a quarter in about a week. It would have been a nice point. Now this works just as easy on the E-mini. This is a 30-minute chart of the E-mini. As you can see here, this is going back just to the 14th. So the 14th was just last Friday. So these are actual signals automatically generated on a 30-minute chart starting Friday going up till today, this morning when I took this snapshot. These were all valid signals to go long because they meet all the requirements of strategy number 4. We're above the 50-period simple moving average. You see how we close in the top 25%, and they're all green bars, except for this one. Now this one was a valid signal to go long, but the Pet Dee said, well, I wouldn't take it because it's colored red. Now you could have had a nice little profit, but you would have had to been very quick because the market fell out of bed. Now coming into today, we had a signal to go short. All right, roughly about 8:30 this morning Pacific time, but it was a sell signal. All the rules were met, but the Pet Dee said no because we're colored green, so we would not have taken this signal, and it would have been good because we probably would have been stopped down. If we want to go to a 10-minute chart, this was today on a 10-minute chart. were below the 50-period simple moving average. All right. Strategy number 4 automatically generated a sell signal at the very opening 10-minute bar. It was colored red, so this was a valid signal to go short, roughly about 1826, going all the way down to about 1822. 4 points in just roughly about 20 minutes, 20 or 30 minutes. Now, another signal to go short was generated roughly about 8 o'clock this morning, but the bar was green. So as you can see, this would have been a faulty signal to take because it never really went lower. So do you see how these two strategies, as well as, or I should say one strategy, as well as the Pet Dee tool, can really help you to elevate your trading to get to that consistency you're looking for. This also works in the Forex markets. Here's a daily chart of the euro-yen. Here was a valid signal to go long using strategy number 4. But if you see here, the bar is red, so we do not take the trade, and it would have gone up for a little bit, but momentum quickly went lower, and then we were generated a sell signal, and the color was red, so this was a valid signal to take, and you can see we went straight down. We went down roughly about 300 or 400 pips. And this was a signal that was generated yesterday, so it hasn't really unfolded. Prices above the 50-period simple moving average in the U.S. Canadian dollar. We had 2 buy signals generated, strategy number 4, but they were colored red by the Pet Dee, so we wouldn't have taken these. But yesterday we had a signal that was generated in green, and even though we could have probably gotten in at much lower prices, we want the verification that we actually are going higher. We want at least some consistency to enter into the trade. So we wait for that confirmation with a green bar, and where so far our Forex students are long the Canadian dollar. All right, so let's recap. We shared with you these 2 identifying techniques, these 2 ways to identify momentum. Remember, the first one is, I don't care if you trade a 5-minute chart or if you trade daily bars, if you trade monthly bars. You should always have a 50-period simple moving average on your chart. It doesn't matter what time frame, what direction you like to trade, or what market. Always have a 50-period simple moving average on that chart. And then ask yourselves, where is price in relation to that 50-period simple moving average? If price is above, if the majority of price is above, the overall trend is up, and you're only going to be looking for long setups. You'll never try to short a market when price is above its 50-period simple moving average. It's a recipe for disaster. It'll work maybe 9 times out of 10, but that 10th time, you'll give everything back. Now, if price is below the 50-period simple moving average, the overall trend is down. So you'll only be looking for shorting or selling opportunities. All right? You should never look to buy anything. I don't care if it's a 5-minute chart or a monthly chart if price is below the 50-period. It might work 9 out of 10 times, but the 10th time it won't work and you'll give everything back. Trust me, I don't say this out of scolding you. I say this from experience. It's the way I used to trade. I used to have great months where I'd make thousands and thousands of dollars, and then on one trade I'd give it all back. And I'd be so discouraged and so depressed, thinking like, boy, I worked so hard these last couple of months, and in one trade I have nothing to show for it. I've given everything back. So it's a recipe for disaster. Remember, we're looking for consistency, and there's no consistency when you try to pick tops and bottoms that go against the 50-period simple moving average. Our second identifying technique was to look for bars that close in the top or bottom 25% of their range. Why? Because this is a great personal clue that the market has given you as to which direction it wants to go. All right? It's not some person who calls himself a trading guru. It's not some chat room or some trading room. It's not some news event, but it's the market itself telling you that most likely this is what it's going to do. So why wouldn't you listen to the most important source, which is the market you're trading? So if you see the price is above the 50 period and you see a bar closing in the top 25%, the market is giving you clues it's most likely going higher. Go back and do some research. Look for yourself. You'll see this on any chart, any time frame. Conversely, if price is below the 50 period and you see a lot of bars or a bar closing in its bottom 25% of its range, the market's telling you it's most likely going lower. There's going to be short-term momentum move to the downside. All right? So use these 2 very simple but powerful techniques. We've combined these to make one of our most consistent strategies, which is strategy number 4. We showed you a lot of the examples how it works. It's a great strategy. It works well. But we ramped up the results even better by adding the short-term trend identifier. That's the Pet Dee. Okay? So we put that Pet Dee together with the strategy number 4, and you saw what a powerful combination they are. Now, one thing I know you're probably going to have a ton of questions on. You say, well, Steve, what are the statistics behind adding these 2 going back so many years? I'm going to tell you right off the bat, we don't keep statistics at Specialist Trading. The only statistics we keep are from the signals that we generated on a nightly basis and that we give to our members. And so far, our statistics are anywhere from, going back the last 2 or 3 years since we started generating signals for our members, anywhere from our strategies being up roughly 30 or 40% to roughly 70%. So that's how well they do. We only keep real world statistics, okay? And these are from real signals that we generate on a nightly basis when they are made available through the strategies we teach. So if someone is saying, well, how well has this worked going back 10 years, that's all hypothetical, and we don't believe in hypothetical. That's why we're told at the very beginning and ending of presentations to show you the disclaimer, because it's true. We can't guarantee that past performance will be repeated. So the only stat we keep are how well our strategies have worked in the past 3 years, roughly, since we started generating them. Now I want to share with you a great deal we have. It's a 2-for-1 attendee special. We're going to, for the first time, actually offer the Emini, or I should say the strategy number 4, which, as you see here, it says the Emini, but it works on virtually any market. It works for trading stocks, as we showed you, works for the Forex markets, it works for ETFs, and it works for the Emini, intraday trading, daily trading, investing, and we're going to combine that with the Pet Dee. That's the Primo Early Trend Detector. This is a great combination, and this is only for the attendees attending today. Let me show you just a couple of more examples of how powerful these things are. Yesterday, or the day before yesterday, the 18th, USA Today reported that Tesla shares hit new high as Apple rumors swirl. Okay, so that was the headline. Shares of Tesla Motors hit a new high Tuesday as investors continued to react to news that the electric car maker's CEO met with Apple's acquisitions chief. Okay, so that's great news. The stock went up, as you can see. This is when the news came out, right here on the 18th. All right, and the first thing we ask ourselves is, where is price in relation to the 50-period simple moving average? Well, price is above. Okay, and if we look to see where we had some buy signals, well, we had a couple of strategy number 4 buy signals prior to this actual event, and both were colored green once we applied the Pet Dee as well. So months before this came out about Apple possibly acquiring Tesla, we already were in the market long with 2 previous buy signals, one given the very second week of January, over a month ago, and one given the 28th of January. So that's how beautiful. Remember what I said, these strategies are rooted in simplicity, and we're taking our cue not from news events and not from outside sources, from the market itself, because the market on these 2 dates was giving us clues that it was going higher, not an outside source. Now, another thing I'd like to mention also about this 2-for-1 attendee special is that the Pet Dee can also work as a great long-term tool. In other words, if we look at a monthly chart of the S&P index, okay, we see here going back almost 20 years, at 1995, okay, we see here we had these nice really up and down swings. These are monthly bars, okay, in the market. You see here, this is when we fell out of bed in 2008, and this is when we've been going ever since 2009 all the way up to now. It would be really nice to know, if you're holding a portfolio of your retirement account, when to be in the market, such as times like this, and then when to get out of the market, such as times like this. Well, if we applied the Pet Dee to this monthly chart, guess what? You see how the majority of bars were green, keeping us in, and then once we had a majority of red bars, we got out. And you could have used this just as a trend identifier. And there's lots of ways just to use the Pet Dee separately from applying it to a strategy. It will not only increase your odds for success by applying it to any strategy, but you can also use it as a long-term trend identifier. So it's a great special we have, giving you the strategy number 4, one of our most consistent strategies, along with the Pet Dee. Now, this great deal we have for you today, if we had these 2 separately, it would roughly cost you close to $2,000. We're dropping the price down to $14.95 to get both of these great packages, but that's for a limited time only. And one of the great things we have also for our attendees is that we have payment plans available. So if you can't purchase them in their entirety today, this combo, you can set up a purchase plan and have a payment plan, and you can still get both of these by paying in some type of structure. Remember, this comes with instant course access. You don't have to wait for anything to be shipped or mailed to you. It comes with 5 videos of instruction, all the ways how to trade the Emini, how to trade the Pet Dee, to give you all the entries, all the exits, and all the stops. On daily signals, we provide you with signal alerts. So you get an email the night before telling you when the signal is in a particular stock or a particular market. All right. We also provide you with archives of weekly video trading lessons. This includes both add-ons. In other words, you get the automatic add-on for generating up and down buy signal arrows for strategy number 4, and you get the add-on for the Pet Dee, which automatically colors the bars either green or red. And then lastly, because I am your instructor and because this really more is like a mentoring course, you get access to my personal emails. You can contact me anytime you like with any questions you may have, and I'll answer them just as soon as possible. Remember, if you purchase these separately, it'd be close to actually roughly over $2,000, and we discounted them as $19.95, but we're discounting them even more for roughly 2 more days down to $14.95, attendees only. So for more information, you can go to our sister site, which handles all of our sales and promotion. That's ProTraderStrategies.com. You can get more information and learn more about all of our strategies and all of our education courses. If you're interested in talking to someone about this short-term discount, you can contact any one of the trading consultants at trading@ProTraderStrategies.com or call us directly at area code 310-598-6677. I'm going to open up the question and answer box, and I want to thank you so much for holding off on asking anything, and I'll try to answer them in the order they were given. If I can just go real quick. Yes, as I stated, someone was asking, is this going to be recorded? Yes, this will be recorded. Leon asks, how many periods do you have to see up and above the 50-period moving average to say it is up? That's a very good question, Leon. What we usually say is anywhere from 2 to 3, because many times, as you saw in some of those examples, price will oscillate above and below the simple moving average. Remember, we're not looking at a EMA, we're looking at an SMA, okay? We're not looking at an exponential moving average. We're looking basically at a simple moving average, okay? And what we want to see is at least a couple of closes either above or below. Now, if you're more advanced and more of an aggressive trader, sure, if it just closes once and you get a signal accompanied with the Pet Dee, by all means, you can take it. And I showed you a few examples such as that. But you don't necessarily have to. You can be more conservative and wait for 2 or 3 bars to close above or 2 and 3 close below, okay? Let's see what the next question is. How do you know whether you are beginning Leon is asking again, how do you know whether you are in the beginning of a trend or at the end? Well, once again, if you're wondering if you're at the beginning of a trend or at the end of a trend, really what matters more importantly than anything is just the overall trend. Okay, the overall trend is really the overall picture. That's where price is in relation to the 50-period simple moving average. So many times, you're putting the odds in your favor just by being in sync with that simple rule. Sure, many times, as we said, you'll be catching the end of a move and you'll be out of sync, but that's okay. The majority of time, you will be in sync. Trust me, if you go back and look at your last 10 or 20 trades, I can almost guarantee that the reason why you had some losing trades is because you were out of sync with this simple rule. So go back and do the work for yourself, the homework for yourself. See how many times you won or made profitable trades if you were in sync with this 50-period simple moving average, or whether you were out of sync and you were losing. I can almost guarantee you that it's because you're out of sync. Okay, let's see here. Why wasn't the SWT close on 210 a buy signal? First of all, I think we looked at SWN, and Jason, I can't go back because I don't want to backtrack. I'll probably go back about 20 slides. This is not a dynamic chart. This is a static PowerPoint presentation. But if it wasn't a buy signal, it was because it didn't meet all of the requirements for particular strategy number 4 signals. Okay. Let's see. I don't understand the 25% rule. Would you please explain it a little more? Sure. Okay, just take a bar, okay, any bar, whether it's a 5-minute bar, it doesn't matter if it's a candlestick, it doesn't matter if it's an open, high, low, close bar like I was showing you, but just take the range of that, okay? If the top of that bar, let's say, is at 20, the extreme high of the range, not the close, not the open, but just the high of the range for that day is at 20, and the low of that range for that day was at 16, right? All right, so the movement of the day was from 20 to 16. Well, that means the entire range was 4 points, okay? So the entire range of the bar is 4 points. Now you want to divide that by 4. So obviously that's 1 point. Well, the top 25% would be anywhere from 19 to 20, okay? 1 point from 19 to 20. You simply divide the bar 4 equal measurements, and the top quarter is the top 25%. The bottom quarter is the bottom 25%. It's really simple, but I think where most people get confused is they start taking the opening or they start looking at candlesticks and they say, well, I'm measuring the body. Don't worry about where opening and closes are. All you're measuring is the extreme high of that day and the extreme low. Now, if you're looking at a 10-minute bar, you do the exact same thing on a 10-minute bar. The extreme high of that 10-minute range, extreme low. Okay? How do you determine, Leon asked, the duration of the signal after determining the trend? When you say the duration of the signal, you mean if you mean how long to be in it? Usually, you know, I don't want to give away the rules to the people that have already purchased strategy number 4 for a much higher cost. But strategy number 4, you are only in the trade anywhere from 1 to 5 bars. Now, it could be 1 to 5 10-minute bars. It could be 1 to 5 weekly bars. So if that's what you're asking in terms of duration, you don't have to be in the trade for that long. But these are all explained in the course, okay, Leon? So everything you're asking is explained in the course. Also, Leon asked, for a swing trade, 2 to 4 days, what time frame to select to at least to get a daily trend? Well, if you're looking at 2 to 4 days, we're just looking at daily bars. Okay. In other words, we don't look at a higher time frame to determine the lower time frame. If you're all we're looking at is for signals that are automatically generated by this add-on that comes with the course. Okay. And so if you're looking at daily bars, most likely you'll be in a swing trade lasting from 2 to 4 or 5 days. If you're looking at 10-minute bars, you'll most likely be in a trade that will last anywhere from a half an hour maybe to 40 minutes. So we're not concerned about trend first and then looking at trend. We're just basically, it's all part of the same plan, in other words. It's all part of all the same rule set. And I think, Leon, this would probably be a good strategy for you because this will explain everything in the course and you'll be able to pick up all of this information extremely easy. I always hear to stay away from programs like the Pet Dee. If the Pet Dee is starting to fail in its efforts, do you make adjustments to correct this as the market changes? It's a very good question, and if you're, I totally understand if you're a little reticent about taking something that is a proprietary algorithm. I totally understand. If something scares you, do not by any means feel that you have to be obligated to purchase this. Just by its, face value, you can see how good. We showed you a number of examples in different markets and different time frames, how well it works, and we do not in any way adjust it. There's no way we will, fool with the numbers. The one thing I can give you is that we actually give you 2 versions. This is one thing we failed to mention. We have a slow Pet Dee and a fast Pet Dee. Now, the slow Pet Dee is meant more for those longer trades where you want to be in the trend for a long time. Okay, a lot of people like to trade that way. Other people don't like. They want to be in and out very quickly. So therefore, we suggest using the fast Pet Dee. But they're based off of the same format, the same guidelines, just have a few small variations in order to give you what you want. So many times people will say, well, this isn't working for me. Well, I'll say, well, use the slow Pet Dee. And then they say, boy, this fits me much better. Now I understand. It's because it's out of sync with your nature. So we really haven't had any complaints with the Pet Dee. Along with the Pet Dee course, we also give you 3 different ways, or actually 4 different ways in which to trade it. So it's a really great course, and I use it every day. I mean, I would be the first one to say that, well, from time to time it doesn't work very well. I use it every day in my trading. So I've been using it since I was on the floor, but it was taught to me. But it was, at that time we didn't have the high-speed computers and algorithms, and I had to do this by hand. So I couldn't use it on intraday charts, and it wasn't a colorbar tool. I just had to come up with a calculation by hand. That it was very simple to calculate, but once I saw it, then I applied it to daily bars. Well, now with algorithms, and you can put add-ons on charts, it's simple. Now we just made it a colorbar tool, and it's just right there. So it's a great, great tool. Once again, if you're having second thoughts about it, do a Google search on people that have purchased a Pet Dee or any of our strategies and see, around 60 countries around the world, we really have had very few complaints about any of our methods or techniques. Vern says, you need an exit strategy to make this work. Obviously, every strategy needs an exit strategy, and we have it. That's what comes with the course. But it wouldn't be fair to the people that purchase this for me to start giving away all the rules. That's the only reason why there was no mention to any exit strategy. But everything we teach comes with exit rules, everything. In fact, we give you more than one exit rule. We give you about 3 or 4 different exit rules so that you can decide for yourself where you want to get out. Remember, we stated we are an educational company. We're not just simply here to generate signals and tell you where to get in and where to get out and have you blindly follow them without any regard to why it's working. I want you to understand the process and to pick and choose which exit, which stop placement, which entry best meets your needs. If you're a conservative trader, you'd pick and choose from this expertise that I've attained in 37 years. If you're an aggressive trader, then you pick from these categories and then apply them so that you feel comfortable. All right, that's what I want you to do. And so you don't have to rely once again on an outside source. We're not about, holding your hand the entire time and having you do exactly the same thing. We want you to make the strategy meet your needs so that you feel comfortable. Okay. Dennis asks, on what software does it work? As you can see, it works on NinjaTrader, TradeStation, Metastock, and MT4. Okay, so just about all the major different charting platforms. A few more questions here. Rich says, can you stay in the trade till reverse signal? Yes, you can. You can do that if you like. I personally don't trade it that way. I just try to take the meat out of the trade, and we teach you how to do that. A lot of traders like to trade this the initial signal where you're in and out probably in one bar and you're done for the day. It's all up to you. I personally don't trade that way where I stay until a reverse, but there are many times you can do that. I just like to take the meat of the trade and then say thanks and look for the next signal. Someone is asking, what is the difference between the Emini and the Pet Dee? Well, the Emini is a trading vehicle. The Emini is the future of the S&P 500, the mini account, and the Pet Dee is a tool. Okay, so they're two totally different things. More questions on which platform to use. These are pretty much the major platforms that we've seen through our students for the last 3 or 4 years, and they've all wanted to be on either NinjaTrader, TradeStation, Metastock, or MT4, so they all work very well on those. Carl asks, when you say price below the 50-period simple moving average, do you really mean that price closes below the 50? Same with the uptrends. Yes, but it's not written in stone. In other words, this is in the course as well, so don't worry. I just didn't want to get too much in detail, but you can have a bar, and I showed you a couple of examples where it opened below the 50 period but closed above, so it was a valid signal. So a lot of people get confused. They say, well, the last 3 bars were below the 50 period, but the signal bar closed above, so does that mean we're now above? Yes, it does, but it's something that you can take into account and decide for yourself if you want to take the trade or not. A lot of our traders say, Steve, I understand if the majority of price is below the 50 and then I get one bar that closes above and it generated a signal, I can actually take it. But I would feel more comfortable knowing that the majority of bars are above the 50 and I'll take the signal then. Well, by all means, then just wait for that. You don't have to take every signal. Remember, this is an educational course. We don't stress that you have to take each and every signal as if this were a system. This is not a system. A strategy is 70% rule-based with 30% left for discretion. And by discretion, I don't mean, wishing or hoping something's going to happen or having an idea when you woke up this morning. Discretion means taking the 37 years of experience that I pass on to you in different ideas and different insights and different techniques, and then using those to ramp up your trading. Okay, it's qualified decision making, but we have 70% that we allow for rule-based rules that we follow. Okay, so to answer your question, the majority of bars should be above the 50-period simple moving average. Okay, in order to meet the standard basis, and they should be closing above. Okay, I hope that answers your question. Tom, thank you for the nice presentation. Could you discuss targets and stops? Sorry, Tom, once again, I don't want to take away from the people that have already purchased strategy number 4 for a much higher price. But trust me, we give all that information in the course. We give different stop levels and different exit to meet your needs once again. You see, it's been my experience that if you try to trade exactly the way somebody else trades, it's almost going to be guaranteed that you won't make money. And I know this because in my teaching, I've had people that try to emulate exactly what I do, and seeing the exact same signals, the exact same entries, the exact same stop placement, they've lost. And the reason why is because the signal doesn't fit their nature. Maybe the trade is too aggressive, maybe it's too conservative. And so they're not able to follow the rules, and subsequently they enter at a wrong price, or they don't exactly remember where to exit, and they just can't be in sync the way I can. So therefore, I've learned over the years that you have to find your own way that meets your needs. I can trade aggressively, And if you want to trade exactly like me, you may not be an aggressive trader. So you may say, you know, Steve, I'm more of a conservative trader. Well, we can take the same strategy, but make it the format fit conservative requirements for you. Even though it's based off of the same 50% or 50-period simple moving average, the same closing the bar in the top 25%, we just change a few things in terms of entry and exits, and you make it conservative, and you'll still have a nice, consistent strategy. So that's what we're trying to do. Remember, we want to educate you so that you won't have to rely on an outside source anymore. You won't have to rely on the signals. You can just spot these on your own after a few months or so. The screen bar and closing high bar will close with candle charts. How can it be done? Well, it just works. I use it on candlestick charts, and it works fine. The different shades are different, but what we would suggest is rather than coloring your candlesticks, just make your open bars white and make your closing bars dark brown or else black. And then once you add the Pet Dee, it works great, and you can see whether it's just a basic dark bar or whether it's a dark bar with the Pet Dee. It's very simple, and we'll show you how to do that. What is the difference, Leon asked, between the simple moving average and the exponential moving average? Well, they're two entirely different moving averages based on different calculations. The reason why we use a simple is because over time it seems to be the simplest. Maybe that's it. It's very easy to calculate. Contact our trading consultants. They can help you with it. But the exponential doesn't seem to work as well. But please remember that the only thing, this isn't a magic tool. The only thing we're looking for is where is price in relation to that moving average. So you can still apply this with a weighted moving average or an exponential moving average. What you really need to be looking for is where is price in relation. So even if you have to use an exponential moving average, you want to see either price above, the majority of price above, or the majority of price closing below. Okay. Mukesh asks, can this method work with candlesticks? Yes, it can. As I stated, I use it with candlesticks. It works fine. Let me see here. Do we have a version that works with Thinkorswim, or must I change my platform to use it with the Pet Dee? Mark, that's a good question. I think you would probably have to ask one of our trading consultants. I'm not sure if it can be applied with Thinkorswim, but you probably have to contact it through email or give them a call, just a quick call, and they can tell you. Okay. Martin says, I've already purchased strategy number 4. What would be my cost to get the Pet Dee? Martin, first of all, I want to thank you. I hope you've done well with strategy number 4, and I'm sure we can give you some type of discount for the Pet Dee. Trust me, you will not have to pay the full charge. We will work with something so that you can also have, because you're a bona fide customer, and we thank you for your patronage. You will get a deal with that. So kindly just contact any of our trading consultants or the one that helped you with strategy number 4, and he'll work out a deal with you. And once again, to all of you also, remember, I realize some of you may be having trouble with your trading. $14.95 may be expensive at this time. Don't worry. We can work out some type of trading plan and payment plan that meets your needs, okay? So don't worry if you can't make the full payment. We can have a payment plan that can have you up and running really quickly. Let me see. Do you care about risk to reward? Yes, we do. And in fact, Leonard, we actually have another program where I talked about it just a few weeks ago, where we actually show you 4 different ways to increase your risk reward per trade. But that's that's our 7 Secrets of Money Management program. And if you want more information, I would contact one of our trading consultants. They can show you how to purchase that, or how to get that on a payment plan as well. Because we take that into consideration as well. We talk about that in strategy number 4, but we really go into detail in our 7 Secrets of Money Management course. Okay. Leon is asking, are you saying customize the signal to our needs? No, Leon, I'm saying customize the strategy to your needs. The signals will always be the same, but your entries, your exits, and your stop placement needs to be customized. In other words, I can tell you to place one stop placement, which is very risky. Now, that may not meet your needs. You're not an aggressive trader. Or I can tell you to have another very conservative stop placement that will meet your needs. Okay? But the signal is always going to be the same. The signal will be the same regardless. It's just how you apply your trading to that signal is what makes it either aggressive or conservative. And this is what will make you a consistent trader. Because trust me, I know a lot of you probably are in trading rooms or chat rooms, and you try to emulate or do exactly what they say or do. and ask yourselves, how's it work so far? Are you making money? Are you successful? I would venture to say that most of you are not, because it's very difficult to copy the way another person trades or their ideas, because you don't have their insight. Even though you think you know all the rules, you really don't. And this is the way my mentors taught me. I wanted to do everything they said, and they said, no, Steve, you have to get your own signals and you have to find your own way. If you try to copy us, you'll most definitely go down a road of disaster. And I'm so glad they taught me that, because I wasn't allowed to copy them, and I found my own way, which is pretty moderate, actually. So what we try to do is give you these great setups, and then we customize the format of the strategy so that we can meet your needs, so that you'll feel comfortable. Because if you don't feel comfortable, regardless if it's a great strategy, if you don't feel comfortable, you will not make money. I can think of dozens of examples where we had trading setups where a lot of our members made money and other ones didn't because they didn't feel comfortable on the exact same signal. So we're trying to make you feel extremely comfortable, okay? Risk asks, do you trade, first of all, I don't trade systems, they're all strategies. Remember, systems mean that you have to trade the exact same way each and every time, and I've just spent a lot of time showing you that you can't do that. And strategies are 70% rule-based and about 30% with discretion. So all of what I teach are all strategies. And Rich asks, do you trade strategy number 4 or strategy number 7? The answer to that is yes, I trade both. Strategy number 4 I usually trade for intraday trading, and strategy number 7 I trade for holding positions overnight. There are two entirely different strategies, entirely different types of techniques, but we're talking about strategy number 4 today, okay? Now remember, we're in closing here. We've gone just about our time limit, and I know some people have to leave. If you're really serious about taking your trading to the next level, we've already into our second month of the year, and ask yourself, how well have you done so far in 2014? Now most of these signals I just showed you, and these actual strategy signals that were generated for our members in the last couple of months since the beginning of the year. So ask yourselves, if you would have liked to have had knowledge on how to generate and see signals like this, well then you should really seriously consider becoming a member of Specialized Trading and taking advantage of this great discount we have. Remember, we usually sell these individually. We'll sell Strategy 4 individually, we'll sell the Pet Dee individually, but we've seen how well they work together in conjunction, what a great powerful combination they make. So we're offering as a special 2-for-1 attendee package of these two great methods in one. Now, this would normally cost over $2,000. We're discounting that to $1,495. And remember, if you can't come up with that in one lump sum, we have payment plans so you can take advantage of it. We want to see you get this knowledge so that you'll be able to not have to rely on anything else and make sure that you can do it yourself. And I'm with you here every step of the way. Any questions you have, anytime you want to talk to me, you can send me an email and I'll answer your questions as soon as possible. So it's not like we give you the information and we say, see you later, good luck. I'm with you there answering questions. I answer dozens of emails every day from my students some are hedge fund managers, some are people that have been just trading for a couple of weeks. So don't worry about your experience. There's a lot of things here to learn regardless of how many years you've been in the market. Okay? So for more information, remember, if you really want to take advantage of this great deal, contact any one of our trading consultants at emailing them at trading@protraderstrategies.com or call us directly at 310-598-6677. In conclusion, I want to thank you so much for attending today. I hope you've had the first couple of months of the new year have been profitable. If they have, I wish you continued success. If they haven't and you really are struggling and you need a way to find that consistency, I really wish and hope that all of you become members of Specialist Trading and join me, and we can all be consistent together. I want to thank you. In closing, take one last look at our disclaimer, and I want to thank you so much for joining us today, and I wish all of you become members of Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.